Welcome to Weekend Trader. I'm Tom White, hosting a look back in the markets this past week and then a look ahead for catalyst for next week. I'm joined here by Ben Lichtenstein. Hey, Ben, pretty eventful week. A lot of headline news. All four of the major indices up more than 1.5%, up to 2.5%. That Russell 2000 was leading the way. But what was your big takeaway this past week on this risk-on trade in the equity markets?
Well, you mentioned the Russell. I think that was a big product to watch, considering the banks, a major focal point this week as they set the tone and really kick things off in terms of earnings. And for the most part, really positive results across the board. I mean, in many instances, we saw record while merger and acquisition fees in terms of JPMorgan, Bank of America, and Citi. And for the most part, Tom, I think with rates, even though they backed off a little bit, they have been on the rise. That's sort of bolstered banks as well and some of the individual names. And so ultimately, the banks really stood out in terms of leading the indices and kind of helping investors sort of focus on the positive and away from some of the negative fundamentals that are out there.
Yeah, we definitely had a taste of earnings season beginning. And out of the 41 or so S&P 500 companies that have reported, over 80% beats on EPS and revenue. So solid start to quarterly results, I think, helped propel the equity markets. But also, Ben, a couple other big stories this week. The FOMC minutes kind of came out, and we saw some more inflationary talk, right? That maybe we could possibly get a start to taper as early as mid-November, even though jobs numbers have been, not to where the Fed wants them. But if you look at some of the other catalysts, crude oil, this is a big one, up over 2% on the week, hit basically 7-year highs this week, above $82 a barrel. Now that's inflation. And I think that's one of the things that was really in focus for a lot of investors and traders this week.
Oh, it sure was. And I think you hit the nail on the head in terms of the Fed comments this week, the FOMC minutes. It raised some of those inflationary concerns. Basically, it showed that the officials are leaning towards a taper sooner rather than later. But I think they've done a pretty good job in terms of disconnecting the taper and the expectations for a rate hike. But Tom mentioned crude oil. It was also a big driver in terms of some of that sentiment, some of those inflationary concerns this week. Now, keep in mind, the bid we saw, while up less than 5%, so nothing major there. It brought the Brent above 85. We saw RBOB, heating oil, participate while natural gas actually pulled back a little bit. But most interesting to me, Tom, inventories from the EIA up 6 million barrels. That should be, somewhat weighing on prices. It's not. But interestingly enough, gasoline inventories and distillates were actually down.
Right.
I saw OPEC and the IMF revise some of their growth forecasts for demand a little bit lower, and expectations were revised a little bit down. But again, crude to the highs, sparking inflation fears. Now, keep in mind, it's been coming about a nice rally on Sunday nights into Monday morning, so it gives us something to watch this weekend.
Yep, and then also we had retail sales data on Friday that was better than expected. The estimates across Wall Street analysts was a negative number, came in positive 0.7, and we all know the consumer drives about 2/3 of the U.S. economy, so that was a positive number. Jobless claims, under 300,000 for the first time since the pandemic started in March of 2020. And then I think if you look at the VIX, Ben, I kind of wanted to hit on that. The VIX is reflective of the risk on trade because it's hitting 5-week lows, trading under 17 level, getting towards that, a little bit of support around 16. So is that reflective of the basic price action for equity markets this week? Is that volatility is down and traders and investors are getting more comfortable with markets at these levels?
An interesting move in the VIX. Tom, I'm glad you brought it to our attention because we took out the lows from September down and below that 18 level. So a sign of some of the optimism and, as you mentioned, some of the positive tone or fundamentals that fed into that in terms of retail sales, the consumer sentiment, and certainly inflationary pressure somewhat muted helped as well.
Yeah. All right. So let's kind of pivot now, Ben. Start taking a look at what catalysts are, going to drive markets next week. And I think the big thing that we're going to focus on is going to be earnings, right? We're getting into the second full week of this earnings season. We've got some big names, including some Dow Industrial names, Procter Gamble, Johnson & Johnson, Travelers on Tuesday. We've got Netflix and UAL on Tuesday after the close. Those are going to be big. On Wednesday, we've got Tesla after the close, along with Verizon and Abbott ahead of the open. And then Thursday, we got some more airlines. We got American Airlines, Southwest that report. I think we're going to start seeing some calls about fuel, rising fuel costs for some of those airlines. But then we've got Chipotle, Intel, Snap. It's a mix of earnings next week because we've got some financials, a lot of regional banks report earnings. We've got some airlines. We've got some streaming services and Netflix. We've got Chipotle. So a wide array. It's not one specific sector. What are you focused on as far as earnings goes next week, the big calls?
I think that's going to be key in terms of these individual names. I think it's going to be important to watch in terms of earnings as far as the individual securities, but also the broader base indices across the board to see if we can continue some of the momentum we've seen off recent lows and ultimately resume that trend environment to the upside up and through 45.49 is where the ES needs to get above. Now, other than the indices and stocks and earnings, I think we should be keeping an eye on in terms of some of the futures markets. Tom, copper, a nice move up to end the week, similar to what we've seen in terms of crude recently, tying into that risk-on sentiment and rates coming off. And then you have the U.S. dollar, which is starting to retreat a little bit. Ultimately, that could help bolster and sort of support the indices, stock prices, and certainly something to watch, especially if rates continue to come off. So those are a couple of futures products I would watch next week.
And don't forget about Bitcoin, Ben. It was
Big
up
time.
over 14% for the week, back above 62,000 at one point on Friday. That's the highest levels that we've seen since April, I believe, so about 5 or 6 months.
Something to watch for there, which helped kind of provide that move up, the expectations that we could see a futures-based ETF as soon as next week. So we heard from the SEC recently, and Gensler seems to be willing to support this. And while the fact that, again, it's a little bit less of a riskier asset than some of the others that have been presented.
Yeah, definitely using the futures as a base for that new fund, more based along a mutual fund as opposed to an ETF. So we'll have to wait and see for news on that. But I think if you look at economic data, Ben, that we've coming out, I think the big focus is going to be on housing. We've got housing starts and permits, housing market index, existing home sales next week. We've got interest rates rising. We've got mortgage rates rising. Inventory is still really low. One of the analyst firms came out and downgraded a bunch of home builders this week because they're not putting out enough product to meet demand, which is starting to hurt their margins. And on top of that, all the inflationary pressures on not only resources, but wages in that space too. So is that one of the things that you're going to be focused on as far as data goes?
No question. In addition to that, Tom, we're going to be watching jobless claims after this week. An impressive number, to say the least, below the 300,000 level for the first time since the pandemic. Maybe the jobs report that we saw, the big monthly report, which was a disappointment, keep in mind, was a little bit of a laggard, and maybe some of those positions are being filled, potentially to set up for a big number next month. So that gives us something to watch in terms of a focal point that the Fed's definitely dialed in, and one that we should be as investors and traders as well.
Yeah, I think that's a positive trend on the jobless claims side. Now we just need that to equate to the non-farm payrolls numbers that we get on a monthly basis, because we missed in August, we missed in September also. So those are going to be key data points to watch next week. But remember, keep an eye on earnings. I think that's going to be the biggest catalyst that's going to drive the equity markets next week, as they had a positive week for the second week of October. All right, Ben, that's going to wrap it up for us today. That's Weekend Trader right here on the TD Ameritrade Network. Be sure to catch all of our shows starting Monday at 8 a.m. Eastern Time with Ben Lichtenstein hosting our Futures show. That'll do it. Have a great weekend.